Hey everyone, welcome. I'm at the same beach that every other fake webinar is at, but it's just because I've got beach envy, and you'll see real soon that Adam is at the real beach, and he still joined us because he couldn't stand to be away from you guys. So it is Tuesday, the 2nd of June. Can you believe it? Man, oh man. We still have ambiguity out there, just like these ambiguous palm trees that are blowing in the virtual wind behind me. But we do have some more information on what's coming down, possibly, at least from the House bill, and then possibly with more to come, hopefully. So I'm going to go ahead and turn it over right now to Jack. And Jack, if you'd give us a quick primer, if you will, on what we've seen so far with the House bill, some of the things that may be coming down the pike. They'll probably change, as the Senate usually does, but give us a little bit of an overview, if you would.
Sure, absolutely. Good morning, everyone. So brief civics lesson, bill goes through Senate, gets to the House, goes to the president. There's a lot of conversation, discussion, negotiation that goes into that process. So now at this point, the Senate has done what the House has done what Senate's done what they need to do. House is working on it. It keeps going back and forth. So right now, the House has passed. Let me reverse that. Sorry, House, Senate, President. Sorry. So the House is looking through, and there's some key changes or key provisions that are believed that will get through. And I'll go through, and I have various lists, and then there's speculation by some of the banks as to what they might be required to do as well. So I'll give you a few of the highlights. So reducing the amount of the loan that need to be spent on payroll, that 75% portion, to drop it down to 60%. So therefore, the 25% on non-payroll goes up to 40%. And those expenses would still be limited to rent, mortgage payments, utilities, interest on loans, all those things. So really that hasn't changed. Extend the window businesses have to use the funds from 8 weeks to 24 weeks. So now we're down, 56 days extended potentially. Again, pursuant to what we've been talking about, which is that, with 56 days, has that been sufficient by the time you got the money? And then did you use it, and is there really a more beneficial use outside that 56-day period as you bring people back to work? Again, trying to marry the reality of maybe there's not work to do, and why pay somebody to do that? And also, okay, let's pay people for doing work that is going to move the business moving forward. So another aspect is to provide more leeway on loan forgiveness for business owners who show they could not rehire workers or reopen due to safety standards. So now we're getting into the desire to move forward, the desire to get people in places, but the reality that maybe it isn't safe enough. Not everybody has the benefit of being able and have access to the proper materials to be able to fabricate or obtain the plexiglass that maybe should be at your reception area now, and to create those physical barriers between people. And then extend the time recipients have to repay the loan from 2 years to 5 years, and then let companies that get the loan forgiveness defer payroll taxes, which has been a big question as to, I think, an unintended consequence or reading that you have a benefit on one end, and then immediately, because of the taxing regime on loan forgiveness, that it obliterates and eliminates that benefit and creates a kind of a net zero or close to it result with respect to the money that's been granted to you, that's been given to you. So there's a couple things too that have been passed along with respect to, and this is from Bank of America, as to what the forgiveness window might look like, in that 60 days having passed following the date the loan was funded, apply for loan forgiveness on the same platform. So, that seems to me a little bit tight. I mean, I think personally think that we end up at a place where it's a point from the end of the forgiveness period. It doesn't make sense to go back to the day loan was funded, especially if they're going to extend that usage period. So there's a little bit of incongruity there. And then, so I won't go into, and then the key is really that the SBA has, the bank has 60 days to review, and then the SBA has 90 days to review. So they're really, the limits that they're trying to impose are on the banks and on the SBA to be responsive to the forgiveness request. So, but I think that there's still some question as to what happens when the actual date of the first day of applying for forgiveness, it will be moving forward in order to file your forgiveness application. And it goes back to something that we said previously also, which is that there are some people that are ready to go. I talked to a client this morning who said, yeah, we've used our PPP money, we're all good to go. Maybe that's it's appropriate for them to file for forgiveness. But for most people that may not have used all their loan funds, you may have an opportunity to use more of those funds or have more of those funds within the realm of forgiveness, especially if they change the numbers from 75 to 60%, therefore increasing the usage of the non-payroll dollars from 25 to 40% or some other variation. So that's kind of the highlights of the updates at this point with respect to what we know is going on or what we believe is going on. But again, until it actually happens and gets through to the end. And then also just a quick reminder that you have the legislature, you have Congress, then they pass the bill. It goes down, funnels down to the regulatory agencies, the SBA, Treasury, and then they interpret what those things are. They fill in the gaps, and sometimes they make up their own stuff. And so, you have all these things coming along, and that's why we can't tell you with crystal clarity what your pathway is in the next 30 days, 60 days, or even in the next 48 hours necessarily, because again, things are changing. Not as at a rapid pace as it was before, but we do continually get updates and speculation as to what might occur moving forward. So that was a lot, maybe more than you wanted, Gary, but that's what's going on currently.
Yeah, that's good stuff. Adam, let's actually hear from Adam and the birds out at the beach.
Yeah. Hey guys. So the only thing that I would add to Jack's commentary is that what was in the bill. I can't remember if you touched on this or not, Jack. I was too busy looking at the ocean, laughing. Just kidding. There was an extension of the repayment terms from 2 years to 5 years. But what was interesting about that is it only applied to loans that were made after something passes. So, otherwise it would be up to the bank. And you would assume that's because loan documents were already in existence that people had signed, but it'd be up to your bank to modify the terms to stretch out to 5 years. In the 24-week period that Jack talked about, I think something else that was pretty important that we've been speculating on in the past, and this really related to what does the June 30th date really mean? Well, part of the 24-week extension was that you had the ability to also do your rehires until December 31st or the 24-week period. I think whichever one came sooner or later. I can't remember the exact verbiage, but it also lengthened out the FTE hire count provision, which I think you touched on a little bit. Jack, I just want to make sure we're clear. As Jack touched on, there wasn't any relief from the taxation element of it in terms of, hey, you can now deduct the expenses that you paid for, but they did extend the ability to defer your payroll taxes until the end of the year, just like the original provision of the CARES Act, irrespective of whether or not you borrowed PPP funds. So that was kind of nice. The House bill passed. Yeah, I think it was the first time they did a phone-in vote or something like that, Jack.
Right.
Whatever
Yes.
it was, it was a new voting mechanism, and it passed. I'm going to fail my civics lessons here, but something like 473 to 1. I hope that implies there's 474 members in the House of Representatives. But whatever it was, there was one lone holdout vote So McConnell said that he wants to take it up soon, but there's not really a definition of what soon is, to Jack's point of they're not saying like by 4 o'clock today, we're going to have voted on it. So hopefully something happens soon, because we're starting to see banks, send out notices saying, hey, your clock's expiring. See, one would think that, 56 days, they know when the first loan funded, it was probably on around April 6th or April 7th. So, I mean, you got, real quick, they need to do something, because the first loans are set to have their 56-day clock expire.
Yeah, and if I could also, I pulled up a separate list that was internal to Shumaker, but it was an interpretation of the House bill as of Friday. And there are a few things that I didn't mention that I think that are important. So, and maybe a little more specificity. So extending, these are again, things that are potentially in the bill as of Friday, the 29th. So extending the covered period for loan forgiveness from 8 weeks from the date of origination to the earlier 24 weeks from the origination date or December 31st. So again, extending the potential covered period. So that's a little more detail. Extending the deadline for the rehire exception to forgiveness reduction and loan forgiveness from June 30th to December 31st. So we didn't really talk about the rehire exception. And then there's modifications to the formula based on number of full-time equivalents, but it's a long paragraph. I won't get into that. We talked about the 60% versus 75%, eliminating the 6-month deferral of payments and replacing it with a deferral until the date on which the amount of forgiveness determined is remitted to the lender. Again, it's not the 6-month period deferral of payment. So again, 2-year period, 6-month deferral, so really 18 months of payment, which may actually extend longer than 2 years to begin with. So I don't know if that muddied the water or if it helped, but there's a little more specificity. And eventually we'll know exactly what the bullet point list is of what has happened. So this is, again, not speculation. It's what is in the bill, but until there's more discussion in the Senate, and we don't know exactly how all that's going to shake out.
So we've got 101 people on. Thanks for joining us. 102 just now. We've got a number of questions, so I'll just remind everybody, use the chat to harass us, but not ask your questions because the questions don't get logged unless they're in the Q&A. And I've got a number that I also received actually overnight and early this morning. So one other thing that I think I will mention, because I've had a number of inquiries in the last 24 hours from people that didn't apply for PPP the first time. Now they, they're starting to ramp up again. They're starting to look, and they heard that, there was money. I think last week, Jack, you said there was about 138 billion. So there's some money out there still, but none of the small banks are taking any new applications yet. So what we have heard is Cabbage is still doing it with a K, and PayPal is the other option that I've heard. Have you guys heard any other, Jack or Adam?
There is, and I will, while we're talking, share, I just found this morning that there is, in relation to, I think it's the U.S. Hispanic Chamber of Commerce that put this out, that there is a program sponsored by a large retailer. And I just took a glance at it earlier this morning, but if I can find that, I'll share that on either the chat or Q&A. The other thing that I should mention, these chats have been focused on PPP, but I should mention an EIDL issue that, again, was talking to someone this morning about, but also I've heard otherwise, and I've had some discussions with our internal SBA people, and also our government relations people that we have internal in Shumaker that spend a lot of time in DC. And that is that the EIDL program, and if you kind of rewind the tape to a discussion from a few weeks ago, that the way this happened was there was an uh-oh moment and the government is trying to find a way to get money in people's pockets. And they said, well, let's maybe use this disaster program within the SBA. The money sits in the SBA. We have a process, and let's utilize that. It became apparent very quickly that that wasn't going to be sufficient. So then they said, hey, let's find some money. Oh, you know what? There's a lot of banks that have money, so let's find a way to leverage off of that. And so that's what they did. So they went from an internally funded program, the EIDL, to the PPP program, which is funded by private banks and other lenders that were brought into being qualified lenders, and that were able to supposedly, obviously didn't work out as smoothly as they wanted to let money out. So what happened was, going back to, and then we kind of went with the PPP story moving forward. To get back on that EIDL program, that issue is that we know of a lot of clients and others who are not receiving what they were promised and are being really kind of pulled around in that regime as to being approved, not approved, etc. Keep in mind that the ideal infrastructure was never meant for this kind of, it doesn't have the bandwidth for this. And that also later on in the EIDL process, and I don't know how this, I'm sure there's a political or some other issue going on in the background, that the agricultural sector felt left out of things. And so at some point, the funnel, the spigot of EIDL funds was limited to, the new applications were limited to agricultural companies. And that really wasn't made well known at all. And so there's also the possibility that if there was further activity on your EIDL loan, that somehow took you out of this unrestricted category into the restricted agricultural category as a new applicant, and kind of mess things up. So, you know, not to create panic, but just understand that there are issues on the EIDL side as well with respect to your potential loans that are out there. And so I share that as commensurate with, or commensurating with the frustration that some of you are having on the EIDL side of things. But that's kind of what I've been told recently as to what's been going on. And also, I think there's been some discussion here about people expecting $10,000, but it ended up being less than that because they used an employee count to pro rata that. If you only had 6 employees, maybe you got $1,000 per employee, and you only got 6 instead of the $10,000 of the initial grant money. So anyway, just a few comments on that side of the equation.
All right, I've got a number of questions ramped up here, and this one I'm going to toss over to you, Adam. So here's this scenario from Maureen. We received our funds on 4/17. This was also a payday covering days worked from 3/9 to 4/11. I realize the ruling is incurred or expensed, but the direct deposit amount was actually withdrawn from our bank on 4/16. So I believe the alternative pay period would be best. Therefore, my first reported payroll would be 5/1, which covers 4/12 through 4/25/2020. So our 8 weeks would conclude with this 6/12 pay, which covers days worked from 5/24 to 6/6. What days do I use on the form, the paycheck dates or the covered dates?
So remember, you have 3 possible day calculations. One is the moment that you receive the funding through 56 days. The second is the alternative payroll period, which is the first payroll that you have that occurs within you having receipt of the funds. And then the third is just the straight up 56 days, which is the same as the first date that I gave you. That applies to all the other costs. So in this specific case, we're talking about payroll. So what we believe will happen, assuming you elect the alternative cover period, which I think you said was May 1st, we believe those first few days are going to count, even though they weren't within the cover period, but it may end up that they get excluded. So, you know, just count them for now, but there's a possibility they could get excluded. That's because we believe that it's cash basis on the front end, accrual basis on the back end. On the last date, what was the date that the last payroll was versus the expiration again, Gary?
Let's see. The days worked 6/6.
And the date of the expiration is?
6/12.
All right. So in that case, you know, we believe that not only would you count that payroll that covers the dates, the earlier dates specified, but you could also include the accrual for the latter dates up through 6/12, as long as it was paid in your next payroll cycle. So again, you should, in your scenario, you should get a couple days on the front end, even though they weren't in the 56 days. And you will absolutely, based on the application as it sits right now, get the dates on the back end as long as you have it paid in the next payroll cycle after your 56 days expires.
All right, great. And I want to do a quick shout out to Vicky. Thank you for passing along this morning the hot off the presses update from your bank, Bank of America. Appreciate that. This is from Bob. If the end of my 56 days is June 8 and the possible changes to 24 or 16 weeks has not happened, should I try to prepay as many expenses other than payroll as possible to be safe either way?
Remember, you can't prepay expenses. So the only prepayment that's really going to count in this case is going to be stuff that you would have done in the normal ordinary course. So on June 8th, as an example, you would have paid the June rent. So you can count the entirety of the rent, not just the 8 days for this purpose. You know, insurance bills, utilities, stuff like stuff that you would have paid in the normal course. You get the full benefit of the entirety of the bill. But what you can't do is pay like July rent or August rent. So just be careful on what you term as prepayment. What that means is that stuff that would normally be for any period for any day within that 56 days is going to count, including stuff that you had to catch up in the beginning. But in terms of prepayment going forward, yeah, it's really just the stuff that would be associated with June, you know, or in a future date, as long as it was the ordinary course of what you would typically pay at that time.
All right, next question. I think I actually know the answer to this one, but I'm going to toss it over to you.
Yay, go for it, Gary. You can do it.
Can I spend the amount that is not forgivable on non-payroll expenses like a new website, for example? I don't think that that qualifies as a utility expense. Adam, your thoughts?
Well, it would end up becoming debt because you would end up submitting an application that didn't include the entirety of the amount spent in the correct ratio. So you just would end up with debt at the end.
Okay, this is from Tom. Now that things are opening back up, is there any chance that Adam will get a haircut and shave? Or is your plan to fully become a beach bum?
Amidst this pandemic, I'm thinking more and more about going and seeking out the Unabomber's cabin.
You know, it's funny, we were talking about this before we started, and I said, you know, I was trying so hard to be like Adam and had it going on, and actually,
Yeah.
There you go.
yeah, so that's as far as it got. And then I found myself touching my face way too much, which is the exact opposite of what you're supposed to be doing. And so, yeah, that was one of my weekend activities to get rid of that. But I feel bad. I feel like I feel less powerful now because I'm just not like Adam.
We all want to be like Adam, but there can only be one Adam, and I'm glad that he's on our team. So next question. This is from Mike. If we're ready to file for forgiveness and expect 100% to be forgiven, any reason to wait?
I wouldn't wait. Not if you feel like you're not in the gray area and you're pretty black and white. What do you think, Jack?
I think that if you know, don't wait until the literal 11th hour, but you may want to wait a little bit longer until at least we get through this next version of this bill that's passing through. just to see what might happen. I mean, we never know. I mean, it sounds like that all the money was expended properly, potentially. So if there's nothing left to do, then maybe yes. But I'm kind of one of those that, fear of missing out maybe is what we might call it. And what if you miss out on something that might happen, that might change? I can't imagine that it would under this person's circumstances, under Mike's circumstances. But yeah, so I would maybe wait a little bit longer if you can.
Yeah, now that you said that out loud, Jack, I didn't know this at the time, but we ended up having a client that was below the $2 million threshold that paid back the money the morning of the announcement, before the announcement had come out that there was going to be the extension of the date, and then that there was going to be the $2 million threshold that would just turn into debt, which opened up a whole can of worms around, well, crap, if you got a loan, can you re-get a loan? So just, that is good counsel, I think, just to say, look, at least let this one get through the Senate and have the president sign it, just to double dog, make sure that there's nothing in it that is a benefit or a curse.
All right, this is the scenario from a wedding photographer named Brett. So he has a C Corp. He's received $13,000 PPP loan. His accountant is telling him he must use 25% for utilities, rent, and or interest, and he works out of his apartment.
Yeah, I mean, I don't know what he means by must. It's just a ratio of 75% payroll, 25% other expenses, which is rent, utilities, and interest. If you don't use it in that ratio, it just becomes proportional to the amount that you did spend on payroll, and then the rest of it becomes debt. So the people that are dealing with absolutes, if Richard is listening, only the Sith deal in absolutes. It's my funny Star Wars reference.
Bringing Star Wars into the picture. That's awesome.
Yeah.
I would add to that it's a matter of perspective too. I mean, you have to spend 25%. No, at this point, you have to spend at least 75% on payroll. You can spend 100% on payroll if you wish. But so, I want to make sure that the perspective is properly aligned with the requirements.
Yeah, and even if you don't, it just becomes debt to the extent. So, for example, in that scenario, if you only spent 50% on payroll, then the ratio becomes what you spent on payroll divided by 0.75, and that's the total possible forgiveness. So it's still all proportional.
All right, here's the next question and scenario. This is from an anonymous attendee. I got our EIDL application approved and was provided a loan amount. Finger on the processing button. Question is, do I push it? Is there a window of time or expiration date? Might not need the dollars, but should we pull the trigger anyway and then just pay it back if we don't end up needing it?
Somebody go for two. Punch it, Chewy. No, I don't. We've had a few clients. That's for you, Jack. I swear I'm not drunk yet already. We've had a few that have had the same question, and my advice to them was pretty similar to what I think this person had asked, which is, there's not too much of a downside in taking the money at this point. That said, getting back to what Jack said at the beginning of, hey, you might have gotten stuck in the agriculture pool. Keeping in mind, we had a company, we had one client that was $1.5 million in revenue that got 500 grand, another that was 5 million that got 500 grand. No rhyme or reason why they got 500 grand. This company is 180 million and it got 150 grand. So, I'd press the button, but who knows what the hell you're going to get at this point.
Yeah, my take on that is that, what is the cost of pushing the button? And maybe a little bit of interest, if you accept the funds, but there's only I can't believe I'm going to say this, only a certain amount of midichlorians in the universe, and so take yours while you can, and hold on to them. Ha.
That was good, Jack. I like that. It's not as strong as the Chewy reference, but that was good.
Yeah. Okay, I'll work on it.
There's always time. We got another hour, I think.
You started an entire maelstrom here. So Richard says with 24 weeks, we don't need absolutes or the power of the dark side. I'm like, oh man, you just started this whole thing rolling, Adam. All right. Next question. Can I use more than 75% payroll in the for payroll in the 56 days, even though the loan is based on 2.5 months?
Yeah, as long as you're not doing anything out of bounds or unduly creative, meaning that like in the BGW example, we were going to spend more than that anyway, just on natural payroll without giving anybody bonuses or anything like that. So as long as you're not doing anything outside of the normal course to get the Jelly of the Month Club in there, in other words, double, triple paying, prepaying, all that kind of stuff. As long as it's normal course stuff, you shouldn't have an issue.
All right, this one's from Brian. Given all the uncertainties around the changes, timelines, et cetera, I'm holding out paying employees to qualify for forgiveness. Can I run payrolls backdated as long as they are within the 8-week period? For example, pay somebody the full 8-week salary in the last day of the 8-week period?
So I'm going to break that one down because I know Jack's going to be afraid to ask this one since the word backdate came into question.
Thank you.
Sorry, the state bar is watching. Hopefully not the NCCPA too. So just be careful with the word backdate. So in terms of, hey, what did I pay the person? Whether it's 5 payroll runs or it's 1 payroll run, as long as the amount doesn't exceed $15,385, that probably doesn't matter too much. But to the extent that you go back and you recreate a payroll, you probably could do that, but I wouldn't advise it because when you go to produce your documentation, how are you going to show the money leaving the bank account? I mean, it's going to show that it ultimately left, but it's like, but not with that payroll. And then all of a sudden you're going to get questions from an underwriter that's like, well, what dates are these for again? So, if you're going to do what you have suggested, I would do it in 1 payroll, not exceeding the amounts versus going back and trying to create 5 different payrolls that occurred in the past.
All right, this next one's from Tom. We receive PPP and EIDL. When the PPP burns through to EIDL and then EIDL burns through to keep the business alive, will this loan bear against any tax implications as we move forward?
On EIDL, it shouldn't have any tax implications because it's just debt.
This is from Brenda. Hey, Brenda, you might want to send me an email with Charlie's contact information, but she said she believes Charlie at Uware Bank is still taking applications, and I probably screwed up the pronunciation of Uware's name there, but I don't know Charlie and I don't know anybody at Uware. So if you could send me an email, I can send this out to anybody that wants it. My email is gfrey@trustbgw.com, gfrey@trustbgw.com. That'd be great. Thanks for mentioning that. Appreciate it. This is from Joe. Jack, your conversation about EIDL was regarding potential loans that have not been issued, or are you saying it is an issue for EIDL loans that have already been executed and received?
Sure, good question. I was referring to ones that are in process that have not been fully processed, meaning you haven't received those funds. That if you're having an issue receiving those funds and you're being kind of tossed around when you go and check on the status, then those are possibilities of what's happening with that program. So, and the unfortunate thing is, I mean, you're trying to get a hold of the SBA, and that's nearly impossible, if at all, to get a hold of them. Whereas on the PPP side, you might have a relationship with a banker that you can go and say, hey, what's going on with this? And they can look in their system, kind of thing. So that's essentially, it's for the ones that have not received any of the funds yet.
All right, next up is from Brent. Hey, Brent, following up on EIDL, did I understand it right that there may not be EIDL loans being approved? I applied early in April, but have heard nothing. I was hoping to get EIDL funds, which would allow me to move my business to a better place, but not needed to continue. I was just wondering if I should not keep hopes alive that some of this money would be available. Thoughts?
Yeah, I would say I hope I didn't like stomp on, pop people's bubbles or anything like that emotionally. But my comments were that and I think there's my understanding, a differentiation between the earlier applicants versus the later applicants. And so it sounds like this particular person was early on in the process, but just hasn't received the funds yet. So I think that there has been a lot of focus congressionally, SBA, Treasury, otherwise, on the PPP side of things. And there needs to be attention on the EIDL side of things, which I think will be forthcoming in order for them to keep their promises. And they just need more money in there, essentially, and more bandwidth. And so I would keep your hopes. So I've not heard anything definitively that I will be able to answer your question that, yeah, you're done at all. There's no indication of that at all. So yes, please keep your hopes up and just keep monitoring. And I'd be curious to know over the course of time, now that we've kind of brought this up, as to, not necessarily in the Q&A forum, but just, maybe via messaging, and maybe keeping Gary informed as to how things are going on the EIDL side, since we've been focused on the PPP side. So, if we can maybe continue that discussion offline, that'd be appreciated, I think.
Yeah, keep me posted on that, Brent. You got my number. This is from Mike. Adam mentioned insurance payment. Are insurance payments eligible for forgiveness?
Yeah. When I said that, I'm like, oh no, but somebody's going to assume that I meant like workers' comp and property and casualty. I was specifically referencing health insurance bills, because although payroll costs include health insurance in it, I think that our belief is that that's going to be cash basis, meaning like if you pay your health insurance bill for the month of June, but you've only got 15 days in it, we're thinking you're probably not going to need to prorate that health insurance bill, and you're going to get the benefit of the full coverage.
All right, this is from Nick. Our rent payment was made on April 1. Loan origination date was April 18. Can the expense be prorated to cover the 8-week period from April 18 to April 30th?
People haven't really asked that question too much. And Jack, I'd ask you to weigh in on this one. There's not a whole lot on the accrual on the front end, but, one would assume that you could go ahead and accrue or count that prorated period. I think the assumption was that most people would have deferred the April rent payment, and they were going to give you credit for the full thing.
Yeah, I think there are a lot of facts and circumstances that go into that. And I think with respect to rent, other than maybe the CAM component of it that is variable, it's probably pretty consistent. So I would think that any period of time that you look at, the permitted use period, is going to be the same number, whether you go back to the beginning and go forward this certain amount of days, or within the period, or with afterwards with respect to things like rent. But yeah, that has not been clarified yet. So at this point, I would go with what we know, which is, use of funds within the appropriate period, at least for now, until that's clarified.
Next up from Joe. I believe we cleared up previously that employer portion of medical, dental, vision, as well as short-term disability and long-term disability insurance premiums can be counted as part of PPP payroll costs. What about workers' comp insurance?
That would be, you mentioned some things there that are on people's wish list that I think we specifically said are probably not included. Possibly going to be in the middle bucket. So what is included is the employer portion of health insurance. So think about your application. You put health insurance down. You do not likely put dental and vision. Dental and vision, I think it's probably possible possible, even though I don't know if we had any clients that used that in the application piece. Disability, I haven't seen anything that said you could include disability, and it was definitely not included on the application piece. And same thing with workers' comp. I know people have this belief that, well, damn it, isn't that required by the state? Isn't that just an implicit tax? Whereas SUTA is explicit, workers' comp is implicit, so it shouldn't account. There's no guidance that says that it counts right now. So that's in our hey, it'd be great, but don't count on it bucket as well. Jack, did you have anything on that one that was either complimentary or contradictory?
No, I think that's
Sorry.
right. No, that's yeah, I think that's right. I mean, there's certain things that are definitely in the bucket that are on paper, whether it's in the loan forgiveness application or in the frequently asked questions, or in other places that are specific as to what is included and what is excluded. Hopefully they will continue to split those hairs and provide guidance and have things be more inclusive in the number as to use and forgiveness of the funds to match the reality of expenses that businesses have incurred over the course of this period of time. I think that the reason why maybe some of these things weren't originally included is, they just don't have the money to fund all of these things. So they had to draw the line somewhere. And there is a possibility they keep moving that line of inclusiveness, similar to the proposal of moving the 75% marker down to 60%. So I think that's another one of those, we need to wait to see what might happen.
All right, this is from somebody that had talked about the website. Follow-up question. I mean, if we spend the money that is not forgivable and then turn into a loan on a new website.
Yeah, I mean, that is what would happen, is that if you had money left, it turns into a loan, and it doesn't really matter what you spend it on at that point. It just turns into a loan.
This is from Lori. If I applied for EIDL and was given a number April 1st or 2nd, but still haven't received any grant or other loan, what are your thoughts on why this is? Jack, I think you've addressed it, but you might want to reiterate it.
Yeah, so a number of potential issues, and you can kind of rewind the tape on this particular program today for a little more detail, but it is essentially potentially a capacity processing issue, not enough money issue, and then also potentially that if there was a reset button hit electronically later on in the process, so you ended up being in an unrestricted bucket and going into restricted bucket, which right now is for agricultural related companies, then so those are a number of possibilities for that happening. And I think that also the focus of the assets and energies and capabilities of the federal government has been focusing more on the PPP side, because that is where people are more interested. Well, that's where more money is. And that's also where people are interested because those are potentially forgivable, versus the EIDL, only the first $10,000 is forgivable as a grant potentially, and the rest of it is a loan. So again, speculation as to why those things are happening, but I've not seen anything that anybody has said, anybody in the know has said that this is the reason why people are not receiving the funds that they were promised.
So while we're on that EIDL theme, I'm going to go forward to a question from Brian. For EIDL loans, there appears to be a lot of restrictions in the loan documents, such as documenting everything you use the funds for, limitations on moving your business, government becomes first in line creditor, etc. Are you guys aware of the fine print in these documents? At first, it was a no-brainer, but now this is more than just a low-interest loan on the surface.
So I would say the perspective on this is that the emergency disaster loans prior to being able to be used for coronavirus issues and business related issues were really limited to things like physical damages, natural disasters, those kind of things, and dealing with the fallout from those. And it is an SBA loan program that has its typical restrictions on, for example, guarantors. The program prior to its modifications for this purpose had the restrictions of a guarantor. You had to have guarantors. There's a lot of due diligence involved in that. And so the perspective is they took this program and reduced some of the restrictions. So maybe you don't have to provide a guarantor. Maybe you don't have to have as high a credit score. Maybe you don't have to have, and so it's a reduction in the restrictions. And so it isn't. I think some people have, and understandably so, tried to compare PPP to EIDL and say, well, the only difference really is that PPP has potential of being 100% forgiven, so being a true grant, versus EIDL being the same, except that it's a loan, except for the $10,000. So yes, to reiterate the comment that yes, there are more restrictions on the EIDL side of things in order to get that.
All right, this is for
Yeah.
Christine.
Sorry.
Oh, go ahead.
The one that I find funny though in that description, I haven't read one of the loan documents yet because we've only had a handful of clients that have actually taken out the full loan and they went ahead and signed the documents. But I mean, having been through the SBA lending process outside of the disaster program, I mean, to put yourself in first position, like arbitrarily without getting a bank to subordinate, I mean, is that, I don't know, how would that even work, Jack?
You mean to allow the bank to take the first position or the government to take the first position?
Well, it sounded like from this question, the government was saying we are in first position if you sign this document, which basically would say, hey, we're going to negate every UCC filing that's out there, which I haven't heard of that before.
Yeah, you're saying, your question is, how can they jump in front of line with you already filed UCCs, et cetera?
Yeah,
And
that would piss me off if I was a bank.
Yes, yeah. And so what I don't know is in the detail of the EIDL program, are they having to go to, or is there some sort of, maybe part of the holdup is that getting that priority and getting that subordination? Because yeah, I mean, you can't tell a private bank that, okay, we're going to subordinate. Now, it may be that somehow that there is a power for, if it's an SBA loan that is being subordinated, is there some sort of, I mean, this is a great question that now I'll go back and see if I can find the answer for, but if it's the first position holder is an SBA loan already, can the SBA jump in front of the line based on the contractual arrangement between the SBA and that lending bank for emergency purposes? And that's something that I don't know and would have to ask some of my colleagues that are more familiar with SBA process. But that's an excellent question as to how that can happen. And I don't have the answer right now.
So stay tuned for Thursday, because I'll bet you have the answer by Thursday morning at 11 a.m. Next question.
Jack Santaniello, the research arm of the PPP Zoom call.
All right. Can you speak to about hiring safe harbor provisions? So we're documenting rehiring rejections, but what about new hires? In the restaurant industry, people are not accepting job offers.
That's a two-part question. One is in terms of new hires. I mean, assuming that you just have somebody that's accepted and you have some writing on that, whether you paid them or not, I would think that would count for the safe harbor provision. in terms of not accepting offers because they're making more on unemployment, you get to count them too, as long as you have the rejection letter. And as we talked about on an earlier call, we talked about, you're supposed to notify unemployment that the person that rejected the offer, at some point, whether or not that's actually going to really impact their claims based on the cycle of how unemployment works and the appeals process works is debatable, but you should be able to count them, assuming you made the offer and they turned you down. It's interesting though. We did have one client that they reached out to their HR consultant, who advised them to not ask for a signature back because it would open up a whole can of worms, air quotes. And my response back was, well, how do you, like, I can understand that in normal circumstances, but how do you align that back with the law that says, or the guidance that says that you're supposed to have confirmation that the person rejected it? So I don't know if anybody else had heard that too from their HR department.
That is probably the next panelist that we need to add to this crazy train, which would be an HR professional.
Yeah.
But hey, we're going to just stick with our knitting right now. So I've got two people that are asking basically the same sort of question here. So Brian's question and then Joe's question. So I'll read both of them together. While the timeline may increase, let's just put a may, because it has not increased from 8 weeks to 24 weeks yet. It needs to be passed into law. So who knows what that final week will be. But let's say it does go from 8 to 24 weeks. Does the payroll forgiveness amount, currently capped at $1,530 per employee, increase? And so that's from Brian. The next question is the $100,000 limit based on per payroll annualization, or just of $15,385 over the 8 weeks?
There's a lot of speculation inherent in that question. Right now, the way the application reads is it's $15,385 cap, period, no ifs, ands, or buts, on the supporting schedule, and it calls it out in the instructions. Whether or not you can exceed the 100 grand or not, that's debate like that. I doubt that's going to change. Because that's been pretty consistent from the very beginning. But if they extend the forgiveness period, or the period out to 24 weeks, can you pay someone more than $15,385? That's a conundrum that they'll have to fix, because otherwise you're going to have people on a series of rolling 8-week averages, and that just seems fraught for problems. What do you think, Jack?
Yeah, I would think that the intention is to allow more time if on the front end of that period of time, the relevant period, that there wasn't full usage of the opportunity to use the funds. And so I think it's an extension of time to use, but I've not seen anything that would increase. I mean, mathematically, it seems logical that that might happen, but I don't think the reality is, at least at this point, that they're going to increase that, because really what they were trying to do with that cap, I think, was to make sure that the money's going to not the higher wage earners. And if it was going to higher wage earners, that there would be a cap on that. So it's trying to level out the recipients of money to that 100K cap. And so I don't see them increasing that, because I think there would be allegations that, well, it was just done to pay more to higher wage earners rather than to extend the amount of money payable to that worker that was already below 100K for that period of time.
Yeah, and with that, I'll be specific as I was listening to Jack's response, thinking about, well, what are the other programs that are out there? I don't, I don't see them necessarily changing the $100,000. B, I'm not actually even confident they change the $15,385, because if you think about the other programs that are out there, specifically the employment credits that were available if you didn't qualify for PPP, all of those have dollar caps as well. So I would see him just leaving 15,385 intact, to Jack's point, to say, look, this was really meant to give you time to rehire people, not to have the same people and just pay them for longer and have even more of it be on the government than the amount that already is.
So we've got a couple more questions that kind of dovetail into this whole, the 15,385 deal. So this scenario is from Brian. For our employees that make $100,000 or more, they're receiving 15,385 cash compensation. We also pay healthcare premiums for employees that amounts to about $1,500 per employee per month. Will all of these amounts be forgiven, or will the 15,385 preclude us from being forgiven the healthcare premiums?
15,385 is just the wage component. The healthcare 401k are additive on top of that.
Okay, great. The other thing that kind of dovetails into this.
I feel like it's Jeopardy. Jack and I are going to start racing.
Yeah, we need to get buzzers.
My button's not working as fast as yours.
No.
Did you want to add to that, Jack?
No, I just said my button's not working as fast as his.
Well, and maybe I'm not paying attention appropriately either, so that could be an ID10T error on my side.
Well, that figures,
right,
Gary, because only Sith deal in absolutes. Just kidding. Again. Yeah.
Bonus.
Yeah.
I'm gonna have to go back and watch some Star Wars, I guess. So this is the scenario: PPP forgiveness on their payroll. Their payroll is paid semi-monthly. Am I correct in thinking you're only to use 8 weeks of payroll that was earned during the 56 days for our hourly and salary employees, and up to the 15,385 those over 100,000, not the 2 months of pay that was originally calculated?
Yeah, the cap for there's multiple moving parts there. The cap no matter what is 15,385 that you can put on the form. I mean, that's just right there on the form. But, in theory, the way that it reads now is that, it may be that if your first payroll had some time in it that wasn't in your cover period, you can include that. And then you definitely can include the accrual on the back end. Sorry about the garbage truck there in the background. You definitely can include some time on the back end as long as it's paid within the next payroll cycle, as long as that entirety of the amount does not exceed 15,385. And now mute me and off the Jack.
It's all right. I'm good.
Okay. Here's the next question. First of all, time check. It's 11:58, and we typically go over this 1 hour time limit. It is a time limit. That's what's on the invitation. So for anybody that has to bow out, again, we'll post this afternoon on the BGW CPA YouTube channel. We've had really a great response on those, so that's been fantastic. It's a good place to kind of rewind the tape if you missed on the front end, et cetera.
But wait, there's more before everybody goes. Live updates from my my legislative crew, or the ones it's called Shumaker Advisors. So in having conversation, one of those guys, he promised an update today. He was supposed to give it to me before 11, but I guess better late than never. So he said there was not movement in the Senate yesterday on the PPP flexibility bill. Nothing is easy over there. It's tough to get unanimous consent. I understand McConnell still wants to do it this week, but they may have some issues to work out. So all these things that we've talked about that may be changes like the 75 to 60%, et cetera, did not happen yesterday. I was hopeful that that might happen, but it sounds like they are working through it, but no new news on that yet.
We're going to have to work with our crack IT department to get some sort of a breaking news banner that comes across and flashes. But in the meantime, that'll do. Thank you so much for that. This is from Carolyn. I used 100% of PPP on payroll. That's awesome. I also received EIDL grant. I used the EIDL money for equipment costs during the 8 weeks. Since they were both used for different things, can we keep both? We own a mobile ultrasound company and have portable equipment.
So you have to, yes, you have to use money for different purposes. Understand that the first $10,000, and if we're talking about the EIDL grant, $10,000 that gets moved into the, and this is, Adam, maybe you can help me out because I'm not sure exactly. So I'm going to take a guess at this, that what happens is money that gets moved over for forgiveness into the EIDL has to be used for the proper purposes within PPP, but if it stays in the EIDL category used for things, other things like equipment, that's permitted, but it's not part of the forgiveness formula necessarily. I think it depends on where it gets allocated in the process. Does that sound correct?
Yeah, you got that right. I mean, the original intent was, hey, we think you're going to be able to get the EIDL before you get the PPP, and we'll roll the two things together. They just didn't want you borrowing money twice for payroll. But for, you know, pretty much everybody, they got PPP for EIDL. Thus, the only thing that's includable in the forgiveness amount for PPP related to EIDL is the grant money associated with the employee count, which is up to $10,000, but it's $1,000 per employee. Anything else is just a loan, you know. So, you know, if you got, you know, this much money in the bank account, you're using this much for payroll and other covered expenses, and this much for other stuff associated with the IDL.
All right, a couple clarifications and a few more questions here. So this is from Brian regarding the whole EIDL deal. So I think they jumped ahead going forward. So it would just limit your future creditors. That's something to keep in mind for unsuspecting folks getting the EIDL. He can also send loan docs. Yeah, Brian, send them to me and I'll forward them on to Jack and Adam. I think that'd be good.
I mean, that seems to make sense in a sense that, you know, you get next in line, and that once that is paid off, you get moved towards the front of the line. The issue becomes is what happens if that loan gets sold. And so you have an unintended consequence of somebody remaining in the first position under that loan. And so, yeah, that comment makes sense. But I have that on my homework to find out the answer for sure.
All right, next question is, if a client is approved for a PPP loan and it's funded, can the lender or the SBA take the money back if the SBA determines that the client isn't eligible?
That's
I'm
a good question.
Probably yes, in the sense that there is, in some of the things that I've been reading, is that the bank has, well, a couple things. Ultimately, it's the borrower's responsibility to have done things properly, to have applied for the loan, to have received the funds, to use the funds, to seek forgiveness, etc. And so the way that they have put this onto the banks, they said, hey, we owe you money for servicing the loan. If we find out that it wasn't appropriate, we're not going to pay you, or we're going to take that money back. So there are, and so I think by implication, the fact that you made certain representations as to all those components that I just said in getting the money, that if they find out that for whatever reason, whatever component, maybe it's even the forgiveness component, that they have, I think, clawback rights to get that money back from you and to chase after you. Now, are they going to? I don't know. Do they have the resources to do that? So, I'm speaking to the ones that have inadvertently maybe done a miscalculation, not the ones that have purposefully done that, because typically there's not a statute of limitations on fraudulent behavior in many cases.
Yeah, in terms of eligibility, you know, I want to break up eligibility into two components. Eligibility, you know, under what we were all worried about in the past, which was, oh, did I really need the money or not? Did I really experience a downturn? I don't see a whole lot happening there just based on everything that's come out. So for eligibility and, hey, would the bank demand the money back or would the SBA demand the money back? I would think that's going to fall more in the, I wasn't eligible in the first place due to other reasons. Convicted felon, defaulted on another SBA loan, didn't pass the affiliation tests, it did not meet the SBA small business criteria in that I was above the 500 employee count, but I was also above the size standard. So, I mean, it really, those would be the areas where I think you'd have a problem whereby the loan shouldn't have been made in the first place because you didn't qualify versus did you need the money or not? Including all that fraud stuff that Jack said.
Yeah, I agree. They're looking for bad actors really, and not to pursue people that have, done everything and maybe missed one step out of 20 and received maybe a little more money they should have, or a little more forgiveness. Again, Jack theory, but that's the reality is they're going to go after start with the big fish. And I would say this, as I said the other day, however, and this has nothing to do with the loan process itself. It has to do with relationships with your employees that may harbor ill will towards you. So if you have someone, and the example I gave the other day was someone a former employee that was involved in the loan process and either, was like, okay, well, and maybe you received a loan that you shouldn't have because they mess with the numbers. Maybe they mess with the numbers unbeknownst to the owner. Okay. So again, there are other factors that go into whether or not you're going to be on the SBA's radar. So, just be wary about that. And then also, and again, I deal in a world with bad actors occasionally. So the documentation that you have, that we've said since day one that you need to be keeping, keep it in an appropriate place. Don't keep it in an unlocked file cabinet in your office or other place that's easily accessible. You need to back up those documents, maybe into the cloud or onto a USB drive or somewhere else. Do everything. And again, I hate having these conversations where I'm saying, okay, think of all the bad things that might happen in relation to you having to prove that you appropriately applied for, received, and asked for forgiveness on these loans. But, in this day and age, there's really no reason, there's little reason to not have an electronic backup of these files offsite somewhere, just for various reasons. I mean, not even putting in malintent. I mean, something happens, there's a flood, the roof leaks because of a rainstorm at your office, and the papers are destroyed beyond legibility. So, just a few words of caution with respect to your documentation again.
That's why we have you on this as well, Jack. We appreciate your perspective too. All right, this is the scenario. We've got 24 FTEs. We had those when we applied and received our PPP money. I've been wanting to terminate an employee so it doesn't affect my forgiveness. I will replace this person through a staffing agency. Would this person count towards my FTE number?
The staffing, first off, you terminated them for cause, they still count as one. The replacement with the staffing agency, if it's like a permanent hire, but it came to a staffing agency, there's no reason that it wouldn't count. The only thing I think we would get into issues with the staffing company is that if it was just, they're just another vendor to you and it's truly a temporary employee. And in other words, like you're paying Robert half or Ministaff or whatever, that's probably not going to count.
Yeah, I would agree. I mean, I think it depends on whose employee it really is. And also termination for cause, also, the various factors that we've talked about that I think were not in that question, but it's fact dependent in a lot of cases as to whether or not that's going to be acceptable or penalized.
Here's the scenario from Nick. If the 401k contribution is calculated as a percentage of income, is that calculation limited to the first 15,385 as well? Adam?
So, this is one of those, hey, we're not quite sure, but here's what we think. I think our thought is, look, if you're going to do a 10% match, there wasn't a restriction or a 15% match or whatever the number was going to be for your retirement contribution. It doesn't have any bounds on that. So I think that our thought is that, the retirement contribution would be based off the wage, because otherwise you get into all sorts of ERISA problems by having unequal match amount. So we think that whatever that percentage is, that's a percentage, irrespective of the gross wage amount.
And if the question is also that, okay, because the calculation is a component, a derivative of the calculation is made based on salary, that somehow that transforms the 401 contribution into the bucket of salary. Therefore, you have a 100K issue. If the question is about calculation, then that's just like any other number that you used, any other formula you used to calculate. So it doesn't somehow morph it into being salary versus 401K, if that's what the nature of the question is.
Next up is from Heather. I applied for the EIDL forgivable and did not receive a bank deposit for this like others I've spoken to, but I did get an email saying I've been approved for a loan and they gave me a range to choose from. Do you think it's a correct assumption that the $1,000 per employee is forgivable and the rest is actually a loan? It does give me loan terms, but it does not mention that any of this is a grant.
Yeah, I mean, if you have employees, that's just flat out as part of the law. And then the subsequent interpretation that, $1,000 per employee is a grant. I think the only issue that you get into is that it's supposed to come off the top for your PPP forgiveness. So what happens if you get an EIDL loan after you've already had PPP money forgiven? Good question. But while the two are open, it's just supposed to come off the top, off your PPP forgiveness amount.
And if I could, this is tangential to the receipt of funds, whether it's PPP or EIDL necessarily. And this is a comment that we had, that we talked about last week, which is the method of receiving funds. And I shared that it may not show up in your bank account, that you may receive like a debit card looking thing in the mail, and kind of it may look like junk mail. And so be aware of that. Yes, there's plenty of scams out there, so be aware of that. But I was surprised to see that reports of people thinking that they hadn't received their money. They did, but it was in the form of this, one of those kind of fake looking things you get in the mail, that this is what your credit card might look like kind of thing. So just, again, reiterating that from the other day.
Looks like this is the last question out of the 36 or so that we've answered so far. So here's the scenario. If our first payroll was the day after we receive funds, then I understand that we should be able to use that payroll. Then the last payroll will be 3 days after the 56 days. But my understanding that it should also count. So here's the question. What dates am I actually using? The alternative payroll? My dates would actually be the day I received the loan and the date 3 days after the 56 days.
A couple moving parts to that question. So in that scenario, you're using the regular 56-day period, which is the date of the funding, and then 56 days later. It's likely that the first payroll will count in its entirety, and then the payroll will count on the back end for the amount that was still within the cover period. So the only gray area is, all right, will that first payroll really count or not? If it doesn't, then you probably would pick the alternative payroll period. So that gets back more to Jack's point of, hey, you do probably want to get forgiveness earlier rather than later, but at the same time, it's not like you're getting a gold medal or a trophy for being the first to get forgiven. So it probably would behoove all of us to be thinking kind of mid-June, late June, if we're first off the dock to get forgiven, because there's going to be hopefully some more clarity around the outstanding questions we have. First off, in terms of the date range available, whether it's 8 weeks or it's going to expand to 24 weeks or somewhere in between. And then secondly, what's going on with that first payroll period. Again, our assumption is that the whole thing is going to count, even if it didn't have time in the cover period, but there's a chance that it may not.
So when we get more clarity, I think what we'll do is, in true BGW fashion, is we will have a balloon popping ceremony and to celebrate.
Yeah.
In the meantime, we're going to continue to be here and speculate with you and try to help give some clarity where there's a lot of ambiguity. So I think we've raced through all the questions. Thank you again to Jack and Adam for taking your time out of your vacation to broadcast live from a beach somewhere in the United States. And
Sure. I'll give you a little shot here if I can. So.
Oh, that sounds great.
There's the ocean for you.
Beautiful. That's so awesome. Hope you enjoy with your family. And
Thank you.
Good to see that you are young enough that you heal quickly from that mountain biking accident. Glad that you're smiling and doing well. Everybody, thanks for taking time to, we still had 107 people on today, which still blows my mind. But thanks to everybody that's doing this, and we'll be back again on Thursday morning, Lord willing.
Hey Gary, before we go, there, do you want me to? And I found the link to this U.S. Hispanic Chamber of Commerce, and the email implies that it's for members of the chamber, but when you go to the link, it looks like it is a PPP loan application portal. So I don't know how helpful that would be for, assuming that people have already applied and are kind of in the process. So it's not as if there's additional money, but I'm happy to share that. And maybe I can send that to you offline and you can take a look if it's something worth sharing with others. Yeah,
let's do that.
Okay.
And we can mention that again on Thursday. So everybody, thank you. We'll get this recording downloaded and then uploaded back up to YouTube later on today. You guys have a wonderful day. Thanks again for carving out time. Have a good one.
Thank you.
All right. Thanks, guys.